Good evening, everyone. My name is Paul Young. I'm just going to walk you through the expectations, what you might be expecting from the 2016-2017 federal budget. Now, there's going to be a lot of assumptions I'm going to go through, but I'm going to walk you through what some of the pressure points will be with this budget. Now, the federal government just released their fiscal updates, and let me just speak quickly about what the fiscal update is. It's a kind of an as-at look at a moment at time where the government's finances are in terms of its position, in terms of everything that's going on in the economy and all that. So it's a quick look at where they think they're going to hit the end of the year. So it gives you a little bit about their growth projections and assumptions going into the latter part of 2015, into 2016, and out into 2017. So what you're seeing here is economic growth. When they originally looked at the budget, they thought initially we were going to be hitting 2% growth. We're about 60% or less than that, so we're probably going to end up at the year somewhere around 1.2 to 1.3% in GDP growth, which is marginally down, but it's significantly going to put pressure on the revenue side as the government kind of looks as they're closing their year end off as in terms of the pressure it's going to face. Now, I just put up here to kind of give you an idea of growth projections. Canada in particular is not going to see considerable amount of growth for the next couple years. We're lucky if we see 1.6% growth in 2016 and maybe 2.23% in 2017. So in other words, we're going to see pretty anemic growth numbers, and a lot of that has to do with the fact our economy is driven by exports, it's driven by consumer spending, and it's driven by what government turns around and spends. So since exports are likely just going to grow marginally next year because there's pressure globally, especially with China, that we may not see the uptick from that. This kind of gives you an idea where they expect commodity prices, especially oil. Oil's down about $30 a barrel. They're expecting almost a 50% recovery next year, which may be a stretch. There's still considerable pressure with oil capacity as well as with natural gas as well, and those are key areas that you need to kind of focus on as well. Now, the government decided in 2016-2017 that they're basically going to run a $6.6 billion deficit. That's what they're basically saying. Now, that number never really was explained as part of when Bill Monroe actually talked about it, because if the PC party left him with a $1.9 billion surplus roughly. So we've basically seen $7 billion or $8 billion worth of revenue fall out or in terms of the overall deficit. So there's been a major swing, but there's been no explanation to that. My suspicions are is the Liberal government is put in new spending as part of looking at the refugee status or some of the other initiatives that Justin Trudeau is doing in terms of climate change. He's made some commitments to help poorest companies at $4 billion a year. So some of those numbers might be partly into that, because I'm not sure that I believe the whole numbers are completely correct. And the reason I say that is, yes, corporate profits are down, but we still have had a positive input on the consumer spending side. We've had a positive input on employment numbers. So you're actually seeing certain things impact. So I'm not sure that that deficit number is exactly what it is without that proper explanation. My estimate economic growth for Canada, I would probably put it at about 1.7% next year and about 2.1% in 2017. Now, let's look at some of the strengths that's going to drive the overall revenue and spending by government. Private sector payroll was pretty strong for 2015. We saw net new jobs of about 158,000. 95% of those net new jobs were full-time. We've seen retail sales steady at about 2%. We've actually seen a very strong automotive market this year, so that was one of the reasons why with big ticket items that we've seen there. And we've seen the U.S. economy growing. It fell a lot further than Canada's case, so there's a lot more chances for it to pick up, and we're seeing that case there as well. What we see is weakness, and this is where you need to focus on. We're in a period of pretty well low commodity prices, and that means across the board from metals to oil to natural gas, and that's going to impact things, and that drives the Canadian dollar because the Canadian dollar is tied to commodity prices, and that's what you're seeing with the first two lines. The other thing that you got in play that people seem to ignore is you've got bad provincial policies, and I mean that significantly. These drive how business make decisions. If I'm going to be faced with higher cost or more red tape, then I'm going to look elsewhere where I'm going to put my foreign direct investment. in terms of where I'm going to put it. Ontario's made it quite clear that they're not open for business, and that's going to impact multiple policies in terms of things. The ORPP is scheduled to come in 1 year in 2017. We're already seeing significant heights in the hydro rates, and this has come across the board across Canada. The reason I bring that up is some of the issues that you're going to be faced with in government policies. If the Liberals decide to put more of a pro Agenda 21 into play, then you're going to see hydro rates and other costs go up. That's going to drive out foreign direct investment, and without it, basically it's hard to basically expand exports, and if you can't expand exports, you can't grow the economy, and that's what's critical here. And that's what I'm basically trying to drive here in terms of the weaknesses and the impacts. Now, if I was looking at the government in terms of strategizing of what I wanted to kind of do from a government, I need to focus by sector. There's 3 or 4 sectors that are actually going to grow significantly in 2016, 2017. It looks like automotive is still going to be very strong. There's going to be strong movement in aerospace, food processing, and forestry. Forestry has some issues. That's to do with the softwood lumber. That has to be negotiated. Now, those are the key areas there's some already innovation funds in play, but those are areas where the government needs to really take a hard look at when they're starting to look at all these new proposals in terms of environmental assessments, because they're going to drive how those sectors operate. And if you put more pressure on them in a very soft economy, it's actually going to impact them in terms of their growth targets, which then will impact the economy itself. Also, the government needs to focus on a pro-export agenda. We already have FIFA in play. They need to approve the Trans-Pacific Trade Agreement, which will open up markets in Vietnam and Southeast Asia. They need to continually look at ways to expand into India or other markets that are growing. They need to look at that as well in general, because that's going to continually drive GDP. If we can get our exports into new markets and help business expand, we need to look at that. We need to reduce any sort of impairment to it. We need to hold the line to program spending. That means the government should be significantly not introducing any new program spending as part of the overall government spending initiative. They should try to keep it to less than basically GDP growth, or at least to 1% growth in spending. I don't suspect the Liberals will do that. I suspect the Liberals will up spending everywhere across the board. That's not going to help things, especially at a government spending level. That's going to actually hurt things down the road, so you need to bear that in mind. They're also talking about basically another area that's critical that Justin Trudeau ran on the platform, that they need to work with the provinces. Well, the provinces need to get together and reduce internal trade barriers. Those are causing significant impacts to GDP, especially about $10 to $15 billion a year is lost because provinces are not breaking down these barriers. Those need to be eliminated. There needs to be a focus in innovation. There already is existing funds there for aerospace, automotive, food processing, forestry that need to be leveraged or expanded. We need to kind of look at how we can get more ideas from incubation to market. Those things needs to be expanded as an integrated strategy as part of looking at how you're going to do it. So if you're going to target money or new investment in areas of spending or upping spending, those are the areas it should be, and it should be taken somewhere else where we're seeing programs are not effective. Now, it should be the overall mandate of this government when they're looking at the terms of a spending review. There should be no changes to the stock options. They should leave it as is. Any changes to the stock option deduction will actually hurt startups. It's startups that are basically growing this economy to a certain degree. If you look at the top 500 companies, they're usually startups. To help compensate them, they rely on the stock option aspect, which completely gets ignored from Justin Trudeau and Bill Morneau in terms of the overall flow of capital and understanding compensation works. That's critical. The government should continue with its small business targets in terms of the EI programs that the government of under Harper initiated, as well as a corporate tax deduction. That should also come in play to help small business to put more money in their pockets. Infrastructure spending should be targeted in 3 ways. One, yes, money should flow to municipalities to help them with wastewater treatments and roads, but there should be significant amount of money if they're going to spend on infrastructure that goes to help in port development, pipelines, or anything else that will help move exports to market quicker, because it's exports that are going to drive the overall GDP. Unfortunately, with Justin Trudeau and the Liberal government, you'll never get a clear statement what they talk about in terms of prioritization of projects, and that needs to come in play. The other thing is, it's not just easy to throw money at transit. Transit has to make sense. They need to be really looking at the business cases, the risk assessment plans, and make sure that these projects have been selected because they make business sense, and that they're going to be utilization there on that in terms of the overall model. That's not truly being discussed. Kathleen Wynne in Ontario seems to be thinking just build it, build it, build it. People will use it. That's not necessarily true. It needs to be a strategic play in how that's going to be done, and that means to be a discussion there. The other thing too is the federal government has a role to push these provinces to get their fiscal house in order. Ontario is a disaster. In Ontario, as long as it's a disaster, it's going to be an issue that it's going to put pressure on the federal government to bail it out. Kathleen Wynne is spending so much money just to keep her operational cash going that she basically isn't dealing with policies that drive it, from pension reforms to arbitration to all this that would actually impact the overall flow of revenue and taxation dollars that helps things. Justin Trudeau ran on a platform that he's basically talking about the middle class. Well, the middle class is going to be hurt by any sort of changes to payroll taxes, any sort of changes to climate tax. That all comes out of taxpayers' pocket. If we pass a tax to a business, it's going to pass it on to the consumers in terms of higher prices. That means they're going to have to spend more of their after-tax dollars on spending, which allows them to reduce things down elsewhere. And it's consumer spending that drives the economy, and this is something that Justin Trudeau doesn't seem to grasp. So these are key areas that I would say, as you're moving forward, should be a part of the priority of the government. Thank you.